The government's official economic report card. The latest GDP report shows a considerable slowdown in economic growth during the beginning of the year. The U.S. economy expanded by just 1.1% during January, February, and March. That's compared to growth of 2.6% in the last 3 months of last year. ABC News business reporter Alexis Christophorous is here with more on this. Alexis, on the one hand, the economy is still growing, but obviously that growth is slowing significantly. So what does that mean for fears of recession?
Look, this number shows that we were able to avoid a recession from January to March. Yes, the economy did grow, but we saw a dramatic slowdown. So here's that number, growing just a scant 1.1%, well below the forecast. We were expecting to grow 2% and a lot lower than our growth of 2.6% that we saw in the fourth quarter. And remember, back from July through September, this economy grew at a pace of more than 3%. So I think what this shows you is higher interest rates and inflation finally starting to take hold in the economy. And the Fed's string of interest rate hikes are finally having the intended consequences because the Fed wanted the economy to slow down to bring inflation lower.
Are there particular sectors sticking out to you from this report?
So, at the beginning of the year, consumer spending was very strong, hiring was very robust, and then things started to slow down a little bit. So we dug a little further into this report. Consumer spending still hung on there in the first quarter. Exports, government spending also strong. There were decreases, though, in private inventory investment and residential investment. So I think you're starting to see businesses starting to tighten their belts a little more. And we're seeing that in the way of increased layoff announcements lately.
So what does this mean for inflation?
Well, we're hoping that we would have that soft landing, right, that Fed chair Jerome Powell keeps talking about, meaning we would be able to raise interest rates and avoid a recession. A number like this with such a dramatic slowdown, I think it's going to be really challenging to have that soft landing. And more economists believe that we could fall into a recession later this year.
The Federal Reserve holds its next meeting on interest rates on May 3rd. What do you think they'll do?
Before this report, the belief was they were going to raise rates again by a quarter point because inflation is starting to slow down, so the Fed doesn't need to be as aggressive. We'll see if today's report moves the needle for them at all. If anything, they might get more aggressive and do a half-point rate hike. I kind of don't see that happening because it might signal that the Fed is sort of panicked about the economy. So I think another interest rate hike. Another quick thing I want to point out, this report does include the time when we had those two bank collapses, those mid-sized bank collapses in the first quarter, which also could have contributed to the slowdown in the economy.
Got it. All right, Alexis Christophorous, thank you for that.
Yeah.
Hi, everyone. George Stephanopoulos here. Thanks for checking out the ABC News YouTube channel. If you'd like to get more videos, show highlights, and watch live event coverage, click on the right over here to subscribe to our channel. And don't forget to download the ABC News app for breaking news alerts. Thanks for watching.